The Asia-Pacific markets are back in the spotlight, and this time, it's all about the rebound. After a tumultuous week driven by AI-related worries, the markets across the region are showing signs of recovery. But here's where it gets interesting: the recovery is not uniform, and some markets are still facing headwinds. Let's dive into the details. The AI effect and market sentiment. Last week, artificial intelligence valuation concerns took a toll on Asia-Pacific markets. However, investors are now reassessing their positions, and the markets are responding positively. It's a delicate balance between innovation and market stability, and this is where the story gets controversial. Should we embrace AI's potential, or are there valid concerns about its impact on traditional markets? Inflation insights from China. Over the weekend, China released its October inflation data, and it's an intriguing picture. Headline consumer inflation was slightly higher than expected at 0.2% year-on-year, while wholesale inflation saw a softer-than-expected drop of 2.1% year-on-year. These numbers are crucial for investors, as they provide insights into the health of the Chinese economy, which has a significant impact on the region. Market movements, a mixed bag. As of Monday, the markets in Asia-Pacific are presenting a mixed picture. Japan's Nikkei 225 and Topix indices advanced, with the former up 0.48%. South Korea's Kospi index climbed an impressive 1.5%. However, not all markets are sharing in the gains. Hong Kong's Hang Seng Index futures are indicating a potential fall, with futures lower than the index's last close. The U.S. factor, shutdown and sentiment. Across the Pacific, the U.S. markets are also in focus. The Nasdaq Composite continued its downward trend on Friday, but the Dow Jones Industrial Average and S&P 500 managed to inch into positive territory. This slight recovery was influenced by a new plan offered by Senate Minority Leader Chuck Schumer to end the record-breaking government shutdown. Additionally, consumer sentiment in the U.S. is at an all-time low, according to a survey from the University of Michigan. This news comes on the heels of a report from Challenger, Gray and Christmas, which revealed that layoff announcements in October reached a 22-year high for the month. So, what does this all mean for the global markets? It's a complex web of factors, and the story is far from over. As we navigate these economic waters, one thing is clear: the markets are a reflection of our collective hopes, fears, and innovations. What are your thoughts on the current market trends? Do you think AI-related concerns will continue to impact the markets, or is this a temporary blip? Share your insights and let's spark a discussion.